Hello everyone, welcome back. Last week the gold market was absolute carnage. The bulls took all the glory and the profit. If you have went my one of my forecasting sessions, I was indicating with time to time that gold is going for another all-time high and at least to the level of 2600. But now the question is what is next for gold? So before going there and answering that what is next for gold, let's first review the last week gold market. This is where the first candle of the last week opened and closed. It is of Monday's candle. But why I was so sure that the gold is going to create another all-time high? Look, I'm saying it, I'm mentioning it again and again. The market do either one of the two things. It is either filling the inefficiencies or it is taking the liquidity in the form of buy side and sell side liquidity. So this is a daily time frame and look at this inefficiency in the form of BC, buy side imbalance, sell side inefficiency. The market exactly filled the inefficiency by tick to tick, and then we were having wicks to the downside. It was indicating that the market is going to push higher. Apart from that, the core data was also indicating to me that the market is not going to stop or slow down anytime sooner. Let's move to the lower time frames. So this was for the inefficiency on daily time frame, but we are also having another inefficiency in the 4-hour time frame. And even it was respected in the lower time frame, which was a signal that the market is going to do what it does, and that was trapping the sellers, the traders who short the market at this point. Let me remove it first and draw it again. The retail traders were of the thought of the idea that it is a strong resistance point and the market is unlikely to go above these highs. But it is what happens most of the time. Whenever the market approaches the resistance area, it drops a little, and which further confirms or assures the traders, the retail traders, that it is going to drop. And that is not the idea, and I don't subscribe to that idea. So now we can see the market has broke the all-time high and created another. What is next for gold? Let's move to the daily time frame once again. Look, you must be aware of the strategy, the concept of AMD, accumulation, manipulation, and distribution, which is also called as the power of three. So, what do you think happened at the top of the uptrend in the gold market? Let me show it to you. Guys, this is called accumulation. The market was moving in between 2 points, that is accumulation. After accumulation, there happens manipulation. What is manipulation? The market breaks the consolidated zone to the upside or to the downside to take liquidity in order to clear the liquidity pool, and then it reverses to the opposite direction. So as we can see, this whole range is accumulation. The market accumulated at this point, went to the upside. So what I just mentioned, what happened after accumulation, there happens manipulation. And the market broke to the upside, cleared the liquidity that was resting above these highs. So it is manipulation, and now it is time for the market to distribute for distribution. So I still think the market will go a little above to to touch at least the level of 2600, and then it can drop drastically to the downside. Where it can drop to, so you can see the relative equal lows here at the level of 2470. Again, the market do two things. It either takes liquidity from the market or it fills the inefficiency in the market in the form of BCs or CBs. So what I'm expecting the market to do to reach up to the level of 2600, then drop below these relative equal lows to clear the sell side liquidity resting below these lows. Then I'm expecting the market to fill this inefficiency in the form of BC, buy side imbalance, sell side inefficiency. And if it further drops, then what we are having in the lower time frames, sorry, uh, in the lower section of the chart, we are having another relative equal lows. If the market drops further, we can anticipate the market breaking the relative equal lows to the downside. There might be too much institutional order flow, and there will be too much liquidity below these levels at relative equal lows. They are relatively equal to each other. Okay, the first low is higher than the second low is higher from the third one. So it is a scenario. These types of relative equal lows are more likely to be taken out, or more likely to break to the downside. And then we are also having an inefficiency in the form of BC at this point too. So, but initially, what we will do, we will wait for the market to reach up to that area of 2600, or at least near to that area, like 25 or 95 level, and then we will wait for the market to give us a pattern, a strategy, whatever it aligns with your trading, to short the market, and then we can anticipate the market to drop. But along with that, we will make sure the core data, open interest, and all the fundamental factors are in the favor of the gold moving downward. So guys, this was all about the last week gold market review and what I personally think gold is going to do next. Till talk to you to the next time, take care.